I think what it's telling us is the cost of innovation is collapsing, which it has been doing. I mean, the cost of AI training is dropping before this, 75% per year. The cost for inference, 85 to 90%. I think it throws the weight more towards inference chips from training chips. And so NVIDIA's highly exalted, and deservedly so, in the training chip space. Inference is a lot more competitive. Oh. Yes, we've been studying the tech stack and where we think it's going. We're going to put out big ideas in, I think, a week.
Give us some hints.
Yes, so here's a hint. We do think there are share shifts taking place within the tech stack. We think platform as a service, so think Palantir, is going to gain significant share. And this news yesterday, I think, highlights that, reinforces that. We think infrastructure as a service is going to stabilize the share. Software as a service will come down a share. However, I've said all of that. All of them will be growing rapidly. It's just how rapid.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Cathie Wood will talk about crypto regulation under Trump, Bitcoin's future, and why she believes in its long-term value. Let's catch her up to know more about her bold predictions.
I think we will get significant clarity in terms of regulation. We will get legislation as well. I think many more policymakers in Washington understand that this was a single vote issue for many voters, especially young voters. And so this is becoming much more of a bipartisan issue. And of course, you have the executive branch also supporting it mightily, proposing that we include Bitcoin in Treasury reserves. So you've got, I think we're going to have support of all three branches of government are going to be supportive, which is a big change. Well, I think he didn't understand that this is the next big wave of the internet. This is the layer of the internet that developers did not build in the early 90s because no one thought anyone would buy or use financial services on the internet. I remember back then, no one was going to give their credit card to the internet, right? Yeah. This is the next big wave, and it's a huge efficiency move for the financial services sector. So in terms of Bitcoin specifically, it is really the leader in a new asset class. And we have a paper out on that. You can see the low correlations, which do define a new asset class. And it is a global monetary system. It's a very big idea. My professor, mentor, friend, Art Laffer, when he collaborated with us on our Bitcoin paper in 2015, he said, "This is what I've been waiting for since the U.S. closed the gold window in 1971. So he has been energized by this new movement towards a rules-based global monetary systems. I think competition is great for the U.S., and DeepSeek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet. So, no, I think it's competition is good for the United States. Lowering costs is great for the world. The collapse in the cost of innovation should help all regions of the world. I will say that new productive forces, which was Xi Jinping's new phrase, I think 18 months ago, seems to be showing through right now. Common prosperity was the previous one, and I still think that's in effect. That was more about margins. This is about innovation. So we're looking more closely at China now.
Bitcoin's chances of falling below $75,000 before April remain slim, with analysts estimating the probability at just under 10%. According to Derived's head of research, Sean Dawson, the likelihood has increased slightly to 9.2%, up from 7.2% in the last 24 hours, but Bitcoin's overall strength remains intact. Recent market volatility has contributed to the slight uptick in probability, particularly as Bitcoin faced a 6.5% drop on January 27, briefly touching $97,906. This dip followed a broader decline in crypto and stock markets, largely influenced by macroeconomic concerns and the launch of China-based AI project DeepSeek's latest model. Despite this pullback, Bitcoin quickly recovered, crossing the $100,000 mark again and trading at $102,100 at the time of publication. Dawson attributes the increased bearish sentiment to a spike in Bitcoin's implied volatility, which jumped from 52% to 76%. This surge suggests that traders are actively seeking downside protection, indicating a more cautious approach amid uncertainty. Bitcoin's price movements continue to be closely tied to broader economic shifts. Bitfinex analysts point out that Bitcoin is no longer operating in isolation, but is now firmly linked to global risk assets. This means that macroeconomic events, investor sentiment, and market trends play a significant role in shaping its trajectory. Meanwhile, BitMEX co-founder Arthur Hayes sees a potential pullback toward the $70,000, $75,000 range. If such a drop occurs, he believes it could spark a mini financial crisis, potentially leading to renewed monetary stimulus. Hayes argues that this could pave the way for an eventual Bitcoin rally, predicting a price surge to $250,000 by the end of 2025. Despite market fluctuations, Bitcoin's resilience remains a key factor in the broader financial landscape. While short-term dips are always a possibility, the long-term outlook for the leading cryptocurrency continues to generate optimism among analysts and investors alike.
Well, I think there's a big debate going on. And if you look at the second, third, and fourth quarter of last year, you look at the mega caps and the rest of the stocks in the S&P 500, you'll see mega caps in the second and the fourth did very well. And the smaller cap stocks did very well, much better than the mega caps in the third quarter. I think there's a little bit of a tug of war evolving here. And if we're right, the most massive concentration in the market in history, worse than the Depression, is probably going to give way to a broader-based bull market. We're seeing that in our portfolios, and it really did start right around, actually, the day after the election. And I think one of the most important things is going to happen is regulations coming down. Even in AI, in the United States, their regulations started to intrude in a technology that is today where the internet was in the early 90s. We don't even know what we have yet. Yeah. We're as excited as back then, but now is not the time to regulate it heavily. You know, it's very interesting. We've been thinking about President Trump, or many people have been thinking that, oh, wow, this is very negative for China and a U.S. Relationship with China. But there is another point in history that might be repeating to some extent here. It's called Nixon in China. Nixon did not trust China. He and everybody trusted Nixon because he did not trust China, and they knew he wouldn't lead us astray. I think the same thing is happening here with President Trump. And from a technology point of view, I think he likes the competition, and he actually did say, I believe yesterday, that, you know, this just shows that even in the U.S., regulations, especially that executive order on AI, which he rescinded, probably has held us back. And now, let's go.
Bitcoin's recent dip below $100,000 has sparked fresh concerns among investors, as volatility grips the world's largest cryptocurrency. The drop coincided with the launch of DeepSeek's newest AI model, DeepSeek R1, which has been making waves in the tech world. While Bitcoin isn't directly linked to the AI industry, its price movements often mirror those of major tech stocks. Analysts have pointed to the strong correlation between Bitcoin and indices like the Nasdaq Composite, meaning that fluctuations in the tech sector can have a direct impact on the cryptocurrency's value. DeepSeek's AI model has been gaining traction, rivaling leading U.S.-based AI technologies, such as OpenAI's ChatGPT. The model's rapid success even pushed NVIDIA's stock down, triggering a wider sell-off in the tech market. This broader economic shift contributed to Bitcoin's decline, as investor sentiment took a hit. Despite the sharp dip, Bitcoin remains resilient, rebounding above $103,000 within a day. Financial experts, including Nigel Green of DeVere Group, caution against panic selling, emphasizing Bitcoin's historical ability to recover from market downturns. With a track record of bouncing back from significant drops, Bitcoin's fundamentals remain strong, and long-term investors continue to view it as a strategic asset with potential for substantial growth. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.